Hey guys, what's going on? My name is John from Train. Today I'm going to be talking to you about bull flags and consolidation patterns. Pretty much everything you need to know to catch a nice breakout for a scalp or day trade. Pretty much my goal for this channel is to essentially make it so that when you're talking to another professional, and I'm saying professional very loosely, okay? Because recently about 9.5 million professionals stumbled upon the trading scene. So when you're talking to someone else about stocks, you won't completely sound like an ape. Now, some apes are really smart, so don't take that the wrong way. Now, I'm not going to give you the definitions or anything. I'll show them right now.
Boring!
I want to tell you guys how I use it personally and how we use it in the Train Discord, which is available to join for free below in the description. So the first thing we want to talk about before we get into bull flags and bull pennants is what is consolidation. Now, consolidation happens when there's pretty much a lack of price action, and price action, the best way to think about that is the price goes up when buyers are aggressive, the price goes down when sellers are more aggressive. So when there's a period of consolidation, it means that there isn't one group that is more aggressive than the other, and so it kind of stagnates for a little bit in a period before making an extended move past the previous breakout. So now let's look at a real example from something that we called out in our Discord. This one was from Dima. He's one of our leaders and founders, really great trader, and he found a perfect bullish flag on Nvidia. First, we have our resistance line. So you can see here from before, there were 3 attempts to break this line here at about $515. We can see that there was a huge pickup down below with volume, okay? So during the time where it attempted to break the resistance 3 times, the volume was pretty low. It was all the way down here, and then as soon as it breaks through the resistance line here, the volume spikes. That's called confirmation, and after a breakout with high volume like that, you can confirm that that's the beginning of the flagpole. First and foremost, the most important part of a bull flag. Our flagpole runs from about $515 right here, which was the line of resistance, all the way up to about $525. So our flagpole has about a 10-point range. So that we're gonna want to remember that. So we'll draw this range in here, and we'll write 10 for 10 points. Okay. After we see our flagpole, what's gonna happen next is we're gonna have a low volume consolidation period. And so we talked about this before. It's when
the price goes up when buyers are aggressive, and the price goes down when sellers are more aggressive.
So it results in a period of chop, and you don't want to trade chop, especially if you're trading options. It can destroy your premiums. We'll get into that in another video, but for now we can see that if I take that drawing away, connecting all the highs and connecting all the lows with a single line creates a triangle. Now if we connect the flagpole, it finishes the triangle. That is a bullish pennant. Once we get to the end of the consolidation pattern, which is the corner of the triangle, we're going to be looking for another breakout. And to confirm a breakout, we're going to be seeing high volume, and we're going to be seeing a big move upwards or downwards. To confirm the bullish flag is indeed a bullish breakout, it'll be moving upward from the end of that triangle with high volume, and that is when you're going to want to enter your trade, is during the breakout. We can see here that during the consolidation phase, volume went down, 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 and when it started picking up, the big move here with the volume spiking, triple the volume, 4 times the volume of the regular volume during the consolidation period, followed by a noticeable breakout to the upside. Now, why it's important to know the 10-point range of the flagpole is because once we get the breakout, we can look for a similar range for the breakout of that pattern. So if our flagpole was a 10-point breakout, we can assume that from the end of the consolidation pattern, there's going to be a 10-point move to roughly the end of the pattern, and that is when you're going to want to take your profits. And taking profits is always a hard thing to do. That's something that we always have to remind our members, is to always take the bag when it's available. So we can see here that this moved from about $519 to $529, which is a 10-point range, and then it gapped up the next day, but that's another story. You always want to secure the profit. That was a perfect example of a bull flag. Good job to Dima for calling that out and bringing attention to that. The next flag we're going to look at is a flag on HD, Home Depot, from a few days ago on the 15-minute chart. pretty much this one is a little different from the pennant because the pennant had two converging lines that created the triangle. This bull flag is a different type of bull flag that is a channel, two parallel lines creating the highs and lows. So we look here again. There was a support here that bounced off twice, so it bounced off once, then bounced off a second time, and this created an upward trend that brought up to about $282, and then from here you can see the highs and lows are created by a channel. So after this channel goes down, after the flagpole, from the bottom here, it retests the high, and then finally breaks out to a high point, which couldn't quite get to the previous high, bounced off, created a double top, and then fell back down. But this is an example of a bull flag from about 279 to 285, so that would have been a nice 2% move. You could have caught that with a weekly option, made some nice profit on that guy. So that's just another example of a different type of bull flag that you can notice. And bear flags are essentially the exact same thing, it just flip-flopped. So completely opposite, but they work exactly the same way for bear flags. Okay, so just to wrap up about bull flags, pretty much you want to wait till it has a clear breakout with high volume initially for the flag pull, and you want to not trade during the chop. You don't want to trade during the consolidation. That'll kill your premiums and that'll go down in value even if it's not moving that much price unless your contract expirations are way out there. But anyway, you want to wait for the breakout, catch the breakout, wait for confirmation with that volume spiking at the same time, and catch that volume. Make sure you have a good price target and you're taking profit. So that's going to wrap it up for the bull flag video today. In the future, we're going to be looking at some more technical analysis and different type of consolidation patterns, what they mean and how to trade them, trading the breakouts, trying to get the most profit possible and make sure that we become that 10% that maintains profitability throughout their entire trading career. So if you want to join the Discord, make sure to drop in below. It's completely free. We're going to be there. We're talking stocks all the time, talking strategy, giving call outs, not technically financial advice. We're just giving insight into how we're trading and what we're doing that day. So we are not your financial advisors. Anything that you guys do is completely at your own risk, but we'd love to have you guys there learning with us, joining our community. So we'll see you there. Make sure to drop a like and subscribe to the channel, and I'll see you next time.